Hey, beautiful. Shoot, hit the wrong button. Was enjoying the music. Making the music abuse it, but you can't do to know. Yeah. Anyways, I guess we'll start. No music. Just that was the roughest segue ever. Like dropping a hammer on your toe. You're like, oh, good morning. Welcome to Forex.Today, the YouTube community of 18,000 or almost. If you subscribe today, you might be the 18,000th foreign exchange trader part of our community. Guten Morgen to you. Beautiful morning here in Georgia. But I got needs, man. I got needs. I need some Pfizer. Oh, baby. Give me some Pfizer. I just want one more hit. One more and I quit. I promise. Just give me some more Pfizer. So I'm going to go get some Pfizer at a super site. Right here, huh? Right here. Right? Got my guns ready to get that shot. Vax number 2. Then I'm done. Right? So that should be good. That means then I have to wait 2 more weeks and then I can start traveling. So if you live in Thailand and you want me to visit, send me a ticket to Thailand. Send me a ticket on an aeroplane. I'm ready to travel, baby. So anyways, good morning to you. So what are we going to do today? How about some technical analysis, fundamental analysis, and all that kind of stuff? It's a Wednesday. Let's get on with it. Go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay stable. Focus on the long term and never risk money you cannot afford to lose. Guten Morgen. Yeah, baby. This guy's like, damn. No, actually, I have no idea. The question here is, if I'm fully vaccinated, do I still have to wear a mask? George is funny because, I think it maybe represents the entire United States now, which Georgia was just like a crazy Republican state, right? My people in California, they're still worried about everything. They think the Georgia in the South is a whole different planet. But really now it's 50-50, right? So now it's kind of interesting because if I actually bump into a Democrat in Georgia, they have 3 face masks on and a bee suit, all right? And they won't even, I'm not even joking, not even a fist bump. And then like a Republican shows up and they're like, dude, it's all stupid. It's all fake. And they don't give a crap at all. So it's just really weird. So literally, let's say over the last week, I've had several workers, they show up, right? And no mask, no nothing. I'm like, hey, do you want me to wear a mask? And they're like, I don't care. And then I had another guy come over and literally wouldn't fist bump me, and he's got the big mask on. So it's like one of those things, like there's this weird moment when you run into somebody, and I never leave the house. So it's always people coming to visit, right? Like I never leave. And so when people come to visit for whatever service they're providing, there's this awkward moment like, are you Republican or are you Democrat? But there's no in between, right? So you either wear 2 masks or you don't, or you've never worn a mask. You don't even own a mask. So I don't know. It's a weird dichotomy of maybe, or a microcosm of the entire United States. You're one or the other. So, yeah, it's a personal preference. So it's just really weird. So very often I open the door, I'm like, oh, birds chirping. Yeah, I live in paradise. So anyways, hey, good morning, everybody. My name is Wayne McDonald. I'm a currency trader. Let's do some currency trading. Technical analysis, fair game. Fundamental analysis, fair game. Trader psychology, fair game. Okay. Okay. Right? Why not mask or no mask? I just ask is all I say. I ask it. Generally, though, I will wear a mask. Right? I will bring a mask. I'll wear a mask. Unless everyone else is like, you clearly walk into a room where they're like, dude, why do you have the mask on? Then I'll make a decision. If I'm not staying very long, then I'll wear the damn mask. I'm like, what? You gonna pressure me into not wearing a mask? Like, I'll wear a mask if I, you know. But if I am gonna stay, I'll let the sort of the room dictate. And if I feel uncomfortable, I don't have to stay, right? So it's one of those things. Oh, you didn't know it's a political thing? In the United States, it's very, 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 very much political. It's really strange. So I'll give you another example. I was just in Florida. And some people, they're like, we don't wear masks. We haven't ever worn masks. And then other people I know have been vaccinated. They're fully vaccinated and they still don't leave the house. Like, I mean, they're just starting to pick up groceries. They're just starting to like maybe go, like they got, like, so I took them for ice cream cone. Right? And it's the first time they've been anywhere in a year. And they're like, we won't go inside to get the ice cone. We'll eat the ice cream cone outside. And I'm like, you're fully vaccinated, right? But anyway, so you get, it's like that. Like you've never left your house in a year. You've never picked up your own groceries. You have, everything gets delivered. You've never been to a restaurant. You've never gotten your hair cut, and you're like, totally have been in a bubble where other people are like, this whole thing's fake and it's stupid, and they haven't worn a mask and they go everywhere and they go to the bar, they go to the beach, and it's just like, and if you look at it, it's very much how you vote. It's very, very, very much a political statement. You're like, I'm Republican, I don't wear a mask. Now they're not really saying that, but if you did the study, right? If you studied everybody, it's very much party lines. Okay. Okay. So there you go. So if that's not the same in your part of the United States, or if it's not the same in your country, you asked and I'll share, right? So anyways, but I don't make it political. It's just an observation. So, I'm like a stand-up comedian. I just observe and report, except I'm not a stand-up comedian. I'm an economist. So I observe and I trade. So anyways, please like, please subscribe, please leave a comment. Show YouTube that this is quality content, that you also appreciate being part of this community. And another thing to show your appreciation is to visit tradersway.com, open up a demo account, and just give them an opportunity to earn your loyalty and respect. They're part of our community. They've earned my respect. Give them an opportunity to earn yours. And then when you're ready to trade real money, you'll have an execution partner that you trust, and you'll be able to make that decision wisely. Yes, Trader's Way has fast execution speed, and I tested that with third-party software, so I know that to be true. World-class customer service, yes. Now, many, 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 many newer traders find a broker that advertise being the cheapest. Oh, like trading Euro USD is free, or we have 0.1 on spread. Well, yeah, it's an ECN account, so you have 0.1 on the spread, but you're going to pay a commission. So, like, don't fall for the trap of a broker saying we're unbelievably cheap and you should use us because we're so cheap. It's not true. Okay? Competitive pricing like Trader's Way, yeah, but like Cheap? No. Because you're going to pay, they're going to slip you on the spread. Or like this idea like, oh, we only charge 0.1. Then they tell you, well, yeah, it's 0.1 because it's an ECN account. But when you trade with an ECN account, your spread is almost zero. But you pay a commission. Why would, I mean, it's just sort of a false truth, right? So anyways, go with someone that just does what you expect. You get a competitive fee, whether it's a spread or a commission like an ECN account, and they execute your trade. They don't trade against you. They don't have this, you just want someone to put your trade in the market and do it quickly and do it at a fair cost. And that's why I like Trader's Way. It's just as it should be. Trader's Way. Give them an opportunity. Huh? So, guten Morgen. By the way, this is what I covered yesterday. This is the last slide. Isn't that interesting? So we compared the production possibility frontiers curve to the business cycles and breaking down labor into the subcomponents of unemployment. Here's my trading positions that we've built up last week. 1,100 pips, which is pretty good. So this time a week ago, it was only 500 pips. So now we're up another 600. So, hey, knuckles. And I'm still on this Bitcoin trade. Not on this. I'm in a cash position. And I'm just trying to get to 65 because if you remember, our plan was to buy it at 50 and run it up to 65. Not this one, the one before. And I'll also remind you, we had that plan a month in advance. A month in advance, when we were up here, right? Let it pull back to 50. And then from 50, because it's a 618, we'd go to 65. Well, it went down to 50, and we're now at 64 and some change, dude. Okay? So we basically have done it. Okay? Ultimately, we could possibly go higher, but congratulations on that one. Set it up a month in advance, waited, right? Wow, I smoked a cigar yesterday, but that shouldn't be causing all this. Anyways, so good trade, right? Good trade. Oh, yeah, what happened yesterday? It just glitch in the matrix. Johnny says he switched to Trader's Way, and there are better swaps and better execution. Yeah. It's the vaccine. Yeah. I only got one vax. So anyways. Cool. Nice though, right? Does Bitcoin run on any fundamentals? Well, the way I look at it now is it's sort of the new anti-dollar, new risk on. Okay? So the preppers and the people that are worried about the end of the world, the ones that are preparing for the apocalypse, they went from buying gold to buying Bitcoin. So there you go. Well, so Jim says it's just greed, and Peter says no, and Sky says dollar fundamentals. So look, I have my opinions, right? But there's definitely people in our community that know a million times more than I do about crypto. Okay? Doesn't mean I'm an idiot. I know how to trade, and I understand sort of some of the dynamics that move a Bitcoin. Okay? But can I break down all the various other options? No. And what are the fundamentals and the reasons why we have multiple different types of cryptocurrencies? And like, no, I don't understand that. Bitcoin is become a tradable asset. Whether it's real money or not is not the question anymore. It's irrelevant. Think of it as, like is a collateralized debt obligation, a CDO, is that real money? And what are the fundamentals behind that asset? Because it's based on an underlying asset. So it's a derivative. And so is the derivative real? And then people can bet on the outcome of other people's, CDOs. And so now you can have a derivative on a derivative. Are they real? And what are the fundamentals behind them, if any? And ultimately, if you look at it, they're just tradable assets. They're not real. They're not real. They're not disreal. They're not unreal. But traders can make bets and then hedge against bets and then have derivatives of the bets and then have derivatives of the derivatives on the original bets. And the bets could be on a real asset. And what changes the intrinsic value of the real asset? Well, there would be some sort of fundamental. It could, right? Risk on or risk off is one way of looking at it. So is Bitcoin a real money? Well, at this point, it doesn't matter. That's not what's happening here. It's the wrong question. It's a good question, but it's not a question for this market. It's this instrument. It's this vehicle for deploying capital. Okay? So, is it a tradable asset? Yes. Is there some sort of fundamental underlying is there a fundamental underlying reasoning or rationale for deploying capital in this way? And the answer is yes. Okay? The answer is yes. People are converting US dollars to Bitcoin. There's reasoning for that. Okay? It may not be money, but when you convert your money, let's say your cash, you convert it into a car, or you take your cash and you convert that into a house. Is that real? Yes. Now you have less cash and you own some asset. The house might go up in value, the car might go down in value, but ultimately you simply just converted your cash. In this case, people have converted cash into Bitcoin. And there's a little bit of liquidity, right? You can get various, there's various ways to get like a Bitcoin credit card and stuff. You can go out and great. That's great. Is it M1, M2, or M3, which are forms of money? Not quite. It's not quite currency, but it is an investable, tradable asset. And therefore that. So, and that's one of the reasons I took I signed up for this cryptocurrency class at MIT, because we're going to go into sort of we're going to tear off the front end and kind of look inside, and I'm going to learn more about it, and we'll see. Maybe it'll be helpful. But asking if this is real is not the right question. But maybe, I'm not sure why anything else is tradable. Now, right? So Peter's told us, well, XRP, for example, has some uniqueness that might give it some intrinsic value as well, or an inherent value, if not intrinsic. But why is there 300 or whatever it is other current cryptos? I don't know. So maybe I'll learn about these things, right? Okay. Okay. Cool. So, anyways, I do a reasonable amount of business in Bitcoin. Not really trading Bitcoin, but I do transactions in Bitcoin. Okay. Probably over the last couple of years, I don't know, 250,000 maybe in transactions. So I love blockchain. I love the business end of Bitcoin. And I can see over time Bitcoin doesn't have to be the only one. So the other side of it, of course, would be trading it with leverage. Of course, if I'm doing transactions, they're non-leveraged. It's just converting cash to Bitcoin, Bitcoin to cash. And I know I've talked to potential clients over the last couple of years that are very, very interested in Bitcoin transactions for business, and then the need to hedge it. Okay. Cool. Anyways, so yeah, okay. Let's start here. Little risk on mood coming back with oil. I want to get rid of this. This was from quite a long time ago. Oops. Okay, get back into the game here. Let's identify tops and bottoms. It's funny. Every once in a while, I'll remember living in San Francisco. They had classified ads of tops looking for bottoms. Like, it's always funny in trading. I'm like, oh yeah, this top is in search of that bottom. And if you don't know what I mean by that, don't Google it. Or at least do it in incognito. So anyway, so nice little oil move. Very nice, very nice. Very nice. Okay. So it depends if you think like the 62 is a top, or if you're playing the psych level of 60, right? Whatever you're playing. But it looks like we've gone from, if you're looking at the buy zones, I mean, they could be sell zones as well. It doesn't really matter. But I have it buy zone because I am bullish on oil. I am bullish on global macroeconomic activity. Okay. I'm bearish on dollar. Remember, this essentially is WTI over USD. So if I'm bearish on dollar, I'm bullish on WTI in terms of dollars. That's why this is the term. So I am bullish on this, but what I'm trying to show you is in the sideways mode, you don't really see very much step ups in your buy zones. Okay. And then now we have the step ups. Okay, so it's a sign of maybe waking up. Only on the smaller time frames, though, right? Do you remember doing this? Okay. So one way of looking at it is, where are we, let's say, over a longer period? And this goes back to almost the beginning of the year. I guess maybe we can actually do the beginning of the year. That's probably about right. So you can see from January 1st to the top in basically March 1st, we've had a 50% retracement, stabilizing at 58. So your next question is, or the question that you should be asking yourself, with some reasonable level of analysis, right? Are you expecting a pattern like this? Well, if 50% predicts a 1382, so we're looking at 76 or 77. Is that your plan? Let me remind you that this kind of thought process is what you're supposed to be doing. If you've fallen into the trap of just trading on small time frames only, you're depriving yourself of your destiny. Okay? All right, Sangam says, how much Q1 investment is still in the market? All right, well, let's talk about that for a second. Let's go a little bit twist fundamentals. Do you guys remember I said, probably a month or two ago, that most people that received stimulus checks didn't spend it? I mean, some people immediately spent it because they needed food and shelter. Other people just threw it in the stock market and gambled it on GameStop. But I said most people, it seems, didn't actually spend the money. They got money for free and they just shoved it in their bank account. Do you remember that? Does anybody remember that? Yep. Okay. This is important because they're going to spend it eventually. So if they spend it next year, we're going to make money on that next year. Okay? Cameron says, I think, first of all, don't say that. We only care about research. But he says, I think people spent it to pay their rent. Some people. I'm talking about an aggregate. Okay? Lower income people received the money and they paid their rent, or even didn't pay the rent, but they paid their cable bill and they bought groceries. That is true. Okay? But I'm talking about the aggregate now, because the government gave pretty much everybody money for free. But 90% of people still had jobs. Remember, we're at 10% employment, but 90% of people still had jobs. And they're like, oh, this is nice. I got another $600, but I don't need it. And I don't plan on buying anything because I don't really need anything. Plus, when people have money and times are bad, they save because they're like, well, I don't really feel good about the conditions. Like if I lost my job because of COVID-19, I'll need some cash. So I'll just save it. I don't need to buy it. I'm not going to rush out and buy a TV. I already have a TV. What the hell do I need another TV for, right? So most people, I hypothesized based on how I was interpreting the numbers, most people didn't really spend the money. I actually on the first one, I didn't get the $1,400, but I got the $600 one last year. So I did what a good capitalist would do. I took my family on vacation and I gave the money to Verbo and to the restaurants and to the bar, and I gave my money to Florida. And I spent more than $600, by the way. But I got $600. I took my family on vacation. We went to the beach last June. And I left all that money and a whole bunch more on the beautiful shores on the Gulf of Mexico. Okay, that's what the government was hoping. Okay? But if people didn't do that, and remember, you couldn't really travel, right? So what did people do? Okay. JP Morgan just this morning released their financial statistics, right? Their financial results for Q1. And the interesting thing is deposits, client deposits for the largest bank in the United States. If it's not the largest, it's very close. It's a very, 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 very big traditional bank with branches and ATMs, and like they make a lot of money on trading. They make a lot of money in investment banking, but they are a traditional bank. They take deposits, they loan it out. Two things that were, if you look deeper in the report, two things. Well, three things, okay? Three things. Deposits are up 25%. Okay, think of this. The millions and millions and millions of Americans right, that have traditional bank accounts at JP Morgan. Their savings in those bank accounts, we're not talking about retirement accounts and all that kind of stuff, in their JP Morgan bank account, okay, deposits went up by 25%. Well, where do they get the money? Well, maybe a big portion of that is the free money they got from the government. And they're like, oh, I'll just leave it in the bank. I don't really have anything to do with the money. Okay? Second thing is banks then lend that money out, right? So the amount of money JP Morgan has set aside to lend out to businesses is higher than it's ever been. And then the third thing is nobody's borrowing the money. Okay? Nobody, but we'll say relative, right, percentage-wise against the money that they have to lend out, very few businesses are borrowing money. Very few people are trying to get mortgages on new houses. Very few people are borrowing to buy cars or whatever. And so there's very, very low loan demand at JP Morgan. And again, we're using this to represent the entire U.S. economy. It's a bit of a fallacy, but it's not that much of a stretch. It's one of, if not the biggest banks, and it's all over the United States. So Americans are not asking to borrow money, and Americans have 25% more money in cash in their bank account. Again, not their retirement account and not all that kind of stuff. And I think partially this is because the government gave everybody money, but only 10% of the people needed it. 90% of the people still had their job. So they're like, what the hell am I going to do with this free money? I can't even go out to a restaurant. And some people are like, oh, wow, it's free money. I'll just throw it at GameStop. Boom, let's gamble it. Let's go big. It's free anyways. Who cares? Okay? Thank you, Hope. I'm looking forward to it too. Okay? Cameron, JP Morgan sucks. Yeah, but still, look. Cameron, let's focus on technicals and fundamentals. Right? JP Morgan doesn't suck, but you've had an experience. Okay, great. All right. So I'm sorry it didn't work for you, but JP Morgan certainly does not suck. It's probably the most successful bank in the entire world. It probably doesn't suck. Maybe the entire banking sector sucks. I would agree with that. Okay. So anyways, I'm trying to keep it very specific, right, Cameron? Americans have 25% more money in their bank account than they used to. Where did the money come from? Yeah, Larry Summers. Yeah. Cool. So anyways. Interesting, right? Cool, right? So, what does this mean to us? I'm not super happy with the government, but B, we have what we call animal spirits returning to many people. To the 90% that didn't need the money, they're getting through, right, COVID. Somebody with money has done very well over the last year. Not because of the free money, but because they're exposed to, they own assets. They own the stock market, they own the housing market. And housing is way up, the stock market's way up. Everyone that had money is happy, right? So maybe next year when COVID restrictions come down, we travel more, right? we go on vacations and maybe whatever. Maybe whatever. We spend the money. The challenge right now is prices are up in some cases, 300 or 400%. So the Fed will tell you there's no inflation. And then I had a guy over here, a contractor, yesterday actually, and we were talking about prices going up, and he's like, "Yeah, I've wanted to build my own garage, for a couple of years now." And he said, he was talking about like wood. I think wood. I forget what he was talking about. I'll give you. I remember the ratio because I did the math in my mind. Let's say he normally pays $5 per linear foot for the material, and it's now $25 and $30 per linear foot. So there's like 300, 400, 500% increases in price. So he's like, so I'm not going to build it, right? It's amazing. So 500% increase in prices, but no inflation. Well, the thing is, you can't export that inflation, can you? So I can go to a store and buy a Samsung TV and get a really good deal. But lumber I cannot get a good deal on because it's domestic, and those prices have gone up 500%. Okay, I talked to a concrete guy yesterday. He was over here 6 months ago to give me a quote. I'm like, okay, I want to do the deal, but I want to do a couple of changes, and you probably need to price that out because I bet you prices have gone up. And he's like, yeah, prices have gone up. So like, come back over here, and he's like, we actually don't do quotes anymore. I'm like, what do you mean? He's like, we're booked up beyond 6 months. He's like, we don't even, if people call us and like, yeah, we have a project for you, they say we're not interested. We can't do it. He's like, we have all crews. They've hired people. There's no shortage of people that on his crew, but they have so many jobs that they're basically doing 1.5 years worth of work in the next 6 months. So he's like, he's like, I'm going to come out because I've already been out there. He's like, but if you pay me today, we'll probably get there by October. And by the way, prices are up. So, right? By the way, prices are up. So it's going to be more, right? So just amazing. Amazing. So maybe some stimulus checks went there, but much of the money is still in the bank. Isn't that crazy? So those prices, the local labor maybe has gone up. Local material has gone up. We cannot export that type of product and service. So I have inflation there. The United States has inflation domestically. And if we didn't have open borders, if you had to buy American TVs, American watches, American cars, American everything, then we would be drowning in inflation right now. Drowning. But if you can buy foreign products and services, then we export that inflation. And you can buy a Samsung TV and prices haven't gone up 300%. Interesting, right? That's why we have the foreign exchange market, by the way. What do we do? This is up, that's up. Gold. I mean, I don't know. We already have this, right? This is just revisiting everything. Okay. So we got into our buy zone. Top of the market this week is probably 1760, but eventually we get up here. Eventually, just the short term is 1800. If I remember correctly, the longer term goal is 2000. But they're all just doing the thing. If you're looking for excitement, like your shorter term trades, probably come and go. They move and then they stop moving, and then they retrace, and then they retrace again back with the trend. These longer term trades have been very steady. Okay, they've been very steady and slow and steady. So like on this peso, we're riding the 4-hour 21. You might look at this and on a day trade, it might be very exciting, right? And you're like, oh my God, look at that. It just kicked off of, oh my God. But then you go to like this and you're like, dude, this week, you kicked off 20 and a half, right? You kicked off the central. And yeah, it hasn't done much. You're profitable, but it hasn't done much when you put it in the context of the bigger moves, right? And you're like, yeah, it's been slow and steady and it's eking its way down, just slowly riding the 21. Yeah, that's cool. Okay. But the real trade started way up here and way up here. And we're just kind of, if you look at how much it used to be moving and how much it's moving now, the rate of change has slowed. So if you've been on some of these trades for weeks, this week you're like, nothing has really happened. Okay. Looking here, here's these trades on a 4-hour, kind of zoom in a little bit. And once again, this is what we talked about 2 weeks ago. Find the trend, right? And then we're going to move, if you remember, and I think I did this with everyone, but if I didn't, I definitely did it with the swing trading group, where we talked about let me back up. One of the things we talked about a couple of weeks ago was last period versus this period, okay? And people in my group are comparing the two now with analysis, but, is there a difference between this and this? Is the big question. And if there is a difference, would it look like this, where you get breakout, consolidation, breakout, consolidation, breakout, consolidation, versus reversal? And so, so 2 weeks ago when we're, I guess, sort of in here, we're talking about step downs now. And if it does something like that, compare and contrast it with this, right? Or if you believe it's going to stay in a range, because that's what technical analysis will tell you. Technical analysis will tell you this will continue to range. So if it doesn't continue to range, is there a fundamental explanation or a seasonal explanation? And if not fundamental or seasonal, is it just random? Okay. So if you like this kind of thought process, this is what we talk about a lot in the swing trading group. Okay. Are you going to treat this the same as this? Because technical analysis would. Technical analysis would say it will stay in the range forever. So you're going to look at the range like this and say, well, statistically speaking, we are 2 standard deviations from a mean, right? You could say, or 1 standard deviation. You could say this is the mean, okay? This is a standard deviation below the mean. This is a standard deviation above the mean. So statistically speaking, one would assume a retracement back to the mean. Correct? Well, that's what statistical analysis is doing, looking backwards, saying, well, based on the data set you are giving me, based on your input, this is the statistical probability based on what's already happened. But remember, that's only technical analysis. As professional traders, we have to think forward. Right? It's our job to think forward. When you're on TV, you will have to talk about what's going to happen. When you write a magazine article, you're going to talk about what's going to happen. When you speak at a conference, okay? Right? You're going to have to speak about what is going to happen. So, for example, many years ago, I was in Dubai, and I remember I asked myself, what are people in the Middle East interested in when it comes to trading? Gold, oil, and interest rates. So I did a presentation and it was packed. I had like 62 slides in 60 minutes or something, right? And I remember the guy before me was a famous guy from TV, and he didn't even have slides. He just wrote some notes on the airplane and got up there and babbled. I'm like, how embarrassing. So I went up there and I did 62 slides in 60 minutes and landed right on the exact time, right? But anyways, I did how to trade gold, oil, and sheep. Sheep meaning New Zealand meaning high interest rates, right? So anyways, so it's our job to say not what has happened, but I got up there and say, let me tell you what's going to happen to the dollar, let me tell you what's going to happen to gold, and let me tell you what's going to happen with carry trades. Here's the next 6-month outlook, right? And then when you talk to potential investors, they're going to want to know how you're going to invest your money in the future. So you're going to have to talk about the future almost the whole time. So with this, what we're saying is we see the technical analysis. Technical analysis, many of the tools are just statistical tools. Regression analysis, for example. Okay? You're trying to look at mean reversions. These are just statistical analysis tools. And what they tell you is based on the data set, what will happen. Forward guidance, forward thought process would say, statistically understand this is a deviation from the mean, but based on fundamentals, okay, and based on seasonality, okay, we are going to break out. We're not going to stay in the range. In this case, the statistical analysis is not forward-looking, and you will have to make some decisions. So, for example, when do you plant seeds? November? February? Or April, if you live in the Northern Hemisphere? So you can say, well, April is nothing like November. April is nothing like February. April's the time for change. Right? And we are going to leave the range. You picked a fine time to leave me, Lucille, for hungry children and a crop in the field. Been through some good times, been through some bad times. This time the hurting won't heal. You picked a fine time to leave me, Lucille. Right? This is different. This is a time to leave the range. Maybe. Right? And that's why I asked you, at least if I didn't ask you, I asked the swing trading group, compare and contrast this obvious support. Ask yourself, how should you manage the risk of this? Make a decision on what you should do here. Should you take your profit or not? And then analyze the outcome in the future. Did it break out? If so, why did it not break out here? And if it does retrace, when do you make the decision to get out, right? So anyways, it's a lot of thought process. You're going to get paid for your ability to have a thought process and make decisions from your thought process, and then have the skill to actually carry it out. Okay? Remember, your thought process is your value add. And people will hire you and pay you money because you make better decisions. Remember how I start my book. A general is honorable, right? And victorious because many decisions have been made. Okay? So anyways, this one's Oscar Mike. It's doing all right. Cool. Let's zip over to dollar pairs. Piggy giving back. Okay. Piggy giving back. Okay. So now our process is, will this role reversal hold? Okay. If we get this right, we're on our way to 42. So what are we predicting here? Okay. We're hoping for the down, the bottom forms. So let me draw this a little differently. Delete. And then actually let me click in a bit. Click. 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 My mother effing click. All right. What we're looking at, let's change colors. Thank you, Ace. Muchas gracias, senor. All right. Bottom, double bottom, higher high, higher low, buy. Higher high, higher low, buy. Higher high, higher low, buy. Is this the price action that we are going to get? Well, that would be the trade plan, wouldn't it? Yeah, no, I have a lot of animals. Yeah, I got the windows open. It was so beautiful this morning. Okay. So if I get that, I get paid. If I don't get that, I don't lose money. What I try to teach you is to understand technical analysis, fundamental analysis, and market conditions, whatever that is, fundamentals, seasonality, all that kind of stuff, so that you can enter trades conservatively. And you have the patience and discipline to wait for proper entries. And you have the patience and discipline to let winners run. So that if you got, like, this is a crappy trade, by the way. It's the laggard right now. If you get a look at the basket, if you get a shot on net like this 100 times, you're going to score. Okay? And so to be able to do it without risking much, not just lot size, but your technical analysis is good enough that if things go wrong, you don't lose money. You get free looks. You get a free shot. You either make money or you don't lose money. How many times would you like to have that kind of opportunity? Okay? And so, like, well, Wayne, what about your win-loss ratio? Who cares? Nobody cares about your win-loss ratio. What they want to see, right, is your ability to take low-risk trades that make money. So you get the double bottom. Then you get the higher high. Okay, so now you are on high alert to buy a dip. Does anyone remember the secret word to describe this? This is from years ago. What is the secret word? Hammock. Okay? So Jim remembers. If you remember, then I was a successful coach. The story, the origination of the secret word, was me discussing training in the military. Okay? And what they do was described by a story that I gave about you being on a ship. You're in the Navy. And you're sleeping in your hammock. And the boat is gently rocking. And it's a quiet night. There's a hum of an engine somewhere. And right, everything's wonderful. Can you see yourself swinging in the hammock, sleeping away? Somebody off in the distance snoring. And then what? Arr, arr, arr. And you wake up and you hop out of your hammock. On the floor, your boots are already there. You slide the feet into the boots, and you run, and you run down the hallway, and everyone else is waking up, and there's confusion and madness, and you run, and you have all the doors are open, the hatches are open, and don't forget to duck your head, because the door opening is low, and you duck your head, and then you go up the ladder, and you run to your station, battle station, get in the gun, and you go, and now you're ready to fire. And the captain comes on and says, this was just a drill. This was just a drill. And they do drills like this day and night. Day and night. Jump out of your hammock, get your boots on, run down the hallway, tuck your head on the door, up the ladder. This was just a test, just a test. And they do it night and day and night and day, to the point where you can do it in your sleep. You jump out of your hammock, you slide right into your boots, your eyes are still closed. You kind of rub your eyes as you're running down the hallway. You already know to duck your head. You don't have to worry about it. You duck your head and you go up the ladder, and you get in there, and you're on autopilot. You can do this in your sleep. Okay? You can do this in your sleep. Find your double bottoms, higher highs, and as soon as you got your higher high, battle stations, and you're ready to buy the dip. Fire for effect. Okay? You may notice I just moved the stop from here to here. I don't have a lot of faith in this, but it's a shot. So if this busts out, I don't really care. I don't have a lot of faith in the technicals right now. Okay? So if it's going to run, go. But it's not going, so I'm like, well, I don't want to have pride on this trade. I just want to make money. So I could leave the stop down here, but I don't really care. That's the thing. Okay? CAD giving some back. Okay? Why didn't that take? There we go. Let me put it back. All right, so it didn't take. Giving some back. Stuck in the range. Once again, mediocre trade, but I know it. Okay? I know it. Kiwi, do you remember I shorted this? I made money, by the way. That scalp. Remember the 1515 OCO? Yeah, I nailed it. I got it. But what was my fundamental bias? My fundamental bias is bullish, and you know that. It's right. So anyways, this one has actually worked out. It hit 70, psychological level. And now we're way up here. That's only 71. I mean, it's not a big deal. It's a 100 pip swing trade. That's so small for a swing trader that it's laughable. You're like, oh my God, we did a full month, right? We went from here to there, and it was only 100 pips. How pathetic. How embarrassing. But anyways, it did it. Okay? I'm not on this one because it was the most pathetic opportunity available. So, and it worked, but it was still pathetic. Okay? Okay? Pissy little Aussie trade, if you remember this one. This is the first move in this analysis. Okay, so here's the entry. It's just a buy zone. So now I'm hoping, I need, for this to work out, I need this sort of area here to act as support. And if so, my potential on this trade is, we'll call that an M2. So we're going to go to 78. We're close to 77. So I should be able to pick up another 100 pips. Okay? Okay? But that's really a mediocre monthly trade as well. Once again, I look at that going, really? That's only, you're long at 76. You're going for 78, almost 79, right? Like a 300 pip month. This is a position trade. A 300 pip month is pathetic. Pathetic. But if you're in my swing trading group, we've already addressed this and we've already dealt with this. We understand why it's pathetic. And we're certainly okay with it. Okay? It's when you don't know. Okay? When you say, oh, well, based on March, we are going to 79. Right? Right? Do you guys remember the conversation, swing traders? Based on March, we're going to go to 79. Who gives a crap about March? March may not, should not, will not be our means for measuring April. Maybe it will be, maybe it won't be, but it's the thought process. It's our personal forward guidance. So maybe we're on our way to 79, maybe we're on our way to 90. We just don't see it in the technical analysis yet. Morena says, we don't see any major U.S. weakness yet. I know, right? You're right. You're totally right. You're totally right. Okay. Here's my euro dollar trade. Okay. So that's yet another trade at break even. This one I bought on the central pivot. Okay. And our current target right now is 119, maybe 120. Okay. Cool. So once again, it's not a lot of pips based on, I guess the way to look at it is if it's, okay, if it's a consolidation breakout scenario. Okay. So, yeah. So they're all just starting. By the way, yet another, how many times this year have we been over 1,000 pips? Just in our, our coaching analysis. Like many times this year already. It's only April. That's got to be the third or fourth time we've gone over 1,000 pips. Okay. I think one time we were at 2,000 pips. So imagine what you can do on a full-time account, focusing on macro trends, focusing on seasonality, focusing on hardcore technical analysis on multiple time frames. Right? You're very, very capable of very, very good things. And in the beginning, right? In the beginning, most people that sort of roll in to our webinars, they have no idea that's even possible. Right? And then to find out it's not even a big deal, really, you get to this next level of like, oh my God. Okay? You're like, you start looking at the market so differently. And maybe you've been preached to wrong. Right? Well, then change your preacher. But then you still can't fathom, even maybe after a year or two, that there are times when you could be up 10,000 pips. You say to yourself, that's stupid. That's impossible. Well, doing what you're doing, it is stupid and impossible to think you could, right? But to realize and to gain that knowledge, once you know to try, you try and you change your behavior, right? And that's what I'm really trying to do, is get you to think differently and change your behavior so that you have a real chance at success. Cool. Cash says, doesn't pound yen offer a better chance than a pound dollar? Okay, yeah, I haven't gone into that yet. I'll tell you why, and I think I need to... I think it maybe is in this workspace. Okay. No. Let me tell you. Maybe it's a dollar scan. I have it somewhere. Scan dollar. I have it somewhere on dollar yen. Which dollar yen? Exotics. My God. I don't remember where it is. Hang on. I have it somewhere. I don't think it's here, but let me try it. No, it's not here, but I guess I'll use it. Oh, it is here. Okay, good. This is it. This goes to Cash's question. One of the things that we've been focused on for about 3 weeks now is, as dollar yen was going up, it meant that the yen pairs are the better trades to be on Cash. So like pound yen, Aussie yen, Kiwi yen, whatever you were buying, your funding currency was better off being Japanese yen. And that was true since the beginning of the year. Okay? But remember, in this period, okay, in this period we were selling dollar, sell dollar, sell dollar, sell dollar, and then right in here, the third week of December, out. Okay? And all of a sudden, you could look at this as yen weakness. I look at this as a dollar strength. Because remember, they're almost like indices, right? So one of the things we said for January, February, and March, right, was general dollar strength. Mostly in the beginning on profit taking from selling at the end of the year, right? The fourth quarter was selling dollar. The first quarter is not really buying dollar, but getting out of your selling, right? Okay, great. Then we know, or at least assume, somewhere around April 1st, strength returns to the yen and or, right? Or dollar weakens again. And I'm trying to teach seasonality here. And so the idea is, what we had discussed back in March is there's nothing on this chart at that time, because we were right here, nothing on the chart for weeks and weeks and weeks and weeks and weeks that tells you the yen is going to get stronger than the dollar. And I had called this a funding rotation. And that there's nothing backward looking to predict it, but if you understand how the market works, it's going to happen anyways. Right? And that's the part that blows people's mind, because they're so focused on technical analysis. I'm like, look, it doesn't exist yet, so there won't be any analysis, right? No, Danny, the time to start looking for it, Danny, is the beginning of March. I think I said somewhere between February 15th and March 15th, right? Meaning March 15th, you absolutely hardcore are on alert. And it has to do with fiscal year end taxation flows in Japan. Okay? So anyways, so this is what this is, going back to Cash's question. Our conversation was, what will you need to see? Because it hadn't happened yet when I drew all of this. That's why this is all squished, because there wasn't anything on the right-hand side of my chart. What will you need to see in here to be a believer? What kind of miracle do you need to see happen to show you that the dollar is now the funding term, and not necessarily the yen. Okay? And that I drew this out like, well, you might see like a double top, and then a lower low, then a lower high, and then a lower low, and then a lower high, and then a lower low, and then a lower high, and a lower low. Okay? And remember, I had to squish this in because nothing to the left of this. So imagine, like, let me draw this differently now. Okay? Imagine we were here. Okay? And I was posing these questions to you. And I hope you try to answer them to yourself, right? But what we were saying is, how about some sort of double top, lower low, lower high scenario? Which one of these is going to get you on the clue train? The double top, the lower high, lower low, the lower high, lower low? Like, at what point do you realize you should be selling dollar much more than you have been for months? Right? Instead of selling Japanese yen like you have been for months. How do you determine whether you should be long pound yen? Or how do you determine whether you should be long pound dollar instead? Okay. And I said, look for the funding rotation. And it did not exist at this time. Like I did it here, right? This is when right here, in fact, I should make this smaller. The conversation was here. And I said, when will you recognize it and rotate your portfolio from yen weakness to dollar weakness? And I should also make clear that at that time, I also said, I'm not expecting yen strength per se, like dollar yen and pound dollar and pound yen may both go up, but up until that point, pound yen had performed better. But in the future, you might see pound dollar outperforming pound yen. So it's not necessarily yen strength that I'm looking for here. I'm not calling for people to sell USD yen. I'm just saying in the structure of your portfolio. Okay? This is a portfolio construction analysis that I'm sharing with you. That you would fully expect this on seasonality. I must emphasize, nothing on this chart said this was going to fall. I know, right? But you should have more to your analysis than your chart. Because your chart doesn't think, your chart has no forward guidance, so your chart is going to be correct 80% of the time, not correct 20% of the time, but if you don't have the right risk-reward ratios, your 20% losses are going to eat up 50% of your profitability, and at the end of the year, you were mostly right, but you're still broke. Or mostly right and mostly broke. You're like, I'm a little profitable. Okay, cool. Okay, so at the very least, there's many ways to interpret this. If you were been buying up all the yen pairs, now you can buy up all the dollar pairs, right? Like anything that's funded in dollar, and add to your portfolio. Or you get out, right? Or you start taking money off of your successful yen trades and then buying dollar trades, right? Or at least you're making decisions. So there's the answer, Cash, to like, why pound dollar and not pound yen? Well, I have nothing really against either. Okay? But what I'm looking for, what I'd like to see, is at some point pound dollar outperforming pound yen. And right now, I'm in a profitable, pissy, low success rate pound dollar. Look, I traded a double bottom of a double bottom. So yes, it hasn't performed well yet, but why would it? Technically speaking, it's not a good trade. Fundamentally, it may become a good trade and I'll already be in the trade, or I won't lose money. So what's protecting me is a half decent technical entry. I have a double bottom, but you also know inside the right shoulder of the double bottom is a double bottom 1, 2, 3 hammock trade. So I'm trading a double bottom of a double bottom. Look, even if it's right, even if it's still bearish, it's probably going to do this. Don't you stink? So I have an opportunity to get a pissy little trade in and remove the risk and have a free look. And maybe I get lucky on this one and she goes north. Okay? It wouldn't do it that way. It'd probably do it like this. Okay? It's a laggard right now. So like it still may not work out, but it might. I'm going to take a shot. I'm open. Nobody's guarding me. I see the net. Take a shot. As long as I got, right? As long as I'm not out of position, so I take a shot and the goalie kicks it out to a wing and the wing throws it out and I've left the backfield open. Like, oh my God, I left, right? You got to have a good defense. And my defense is the entry is good. I mean, it's not actually really good. It's not that good, but it's good enough. Like I'm trading a double bottom of a double bottom, take a shot, drop a stop. I had a stop here. Now I'm there. And maybe it works out, okay? So here's the thing. Okay? Here's the thing. Between now and June, this should likely go up. Is COVID-19 news built into this? Is that a risk? Yeah. Turmoil at the Bank of England, yes. All this kind, like, is there risk in here that is, let's say, not right? Is there risk here that's not typical? Yes, and I understand that. So that's why I take one little trade at a time, and then add as the trade becomes more successful, I add small bits to the successful trade. The trade isn't successful yet, so I don't add. And I know that I might be 5 weeks early or I might be spot on. This might be the trade for the year or it's a dud. Okay? Okay? Yeah, so you went pound yen. Okay? You have to understand though, Cash, I'm using a seasonality rotation play. Okay, as I just explained in great detail. So you took this one, and I say, okay, that's fine. You took that one. I did not. Okay, so let's look at this. I guess daily would be the. Okay, let's look at this daily. Are they the same or are they different? Let's take a look. First thing you always want to do is make sure you got the same time frame. Okay? So daily versus daily. Do they look the same to you? And in my opinion, they don't look the same. I'd much rather take this than that. Okay? And it has to do, like, I look at this as sort of a bigger, if you will, right? A bigger, more clearly stated double bottom versus this is support, okay? But also on top of this, and this could be my this is my own subjectiveness, okay, Cash? My own subjectiveness tells me that around April 1st, I expected the Japanese yen to get strong. So even if this is total randomness and I got lucky, I'm still going to interpret that as the seasonality that I expect, which is part of fundamental analysis, right? It's not technical. So it's more of a fundamental issue where I say, I expected yen strength here, and I got yen strength, so I think I'm right. FX Noob, okay. Let me go to FX Noob's thing because it ties in. Why do it on a daily and not a weekly? Because I'm not looking backwards. You have to understand that, FX Noob and everybody else. I'm making decisions based on things not on your chart. I can look back on a monthly. It's irrelevant. I'm doing seasonality fundamental analysis that predicts this is going to fall before it's fallen, before it's even weak. It's been strong, 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 strong. And then I show up one day and it's going to be, right, this pair is going to come down. You're like, what the hell, Wayne? Why would it come down? It's been strong for 17 weeks in a row. Yeah, but it's over next week. So how would that help me? Okay. But the other part that I need to add for cash and FX Noob is I'm not saying pound yen down. Okay. I'm not saying pound yen down. That's not what I've been saying. If you go back to what I said about USD yen, I'm talking about a funding rotation portfolio construction analysis. So most likely pound yen and the other yen pairs will have an ebb and flow throughout the year, but it's not going to perform the same as it has performed up until now. There will be a change in velocity and a change in momentum, which means more volatility, less extensions, more volatility, and that the dollar pairs will also have a change in momentum and velocity. In this case, what I'm expecting, I'm not betting, but I am expecting an increase in probability of more velocity and less volatility. And the yen pairs less velocity, less velocity, and more volatility. And I'm just moving some of the investment strategy from these vehicles, if you will, because I don't really care if it's pound or such, and then move it over to the dollar pairs. But has anything fundamentally changed? No, nothing fundamentally has changed. But I'm on another level based on fundamentals. I'm beyond fundamentals now, and I'm balancing based on seasonality. That's why I say, look, if you look at February and you try to predict May, you're missing a giant piece. You're missing multiple giant pieces of the puzzle. And that's why I encourage you to move beyond pure technical analysis. Now, am I poo-pooing technical analysis? Hell no. I love technical analysis. Okay? But there's more to it than that, right? Right? So like my crew right now, this is the last slide of my presentation I did yesterday. And, we're talking about the difference between full employment, unemployment, we're U3s and U6s, and how this impacts the business cycle. So so when I say, full employment, this is what we were talking about yesterday. Full employment, okay, which is what? At the natural rate of employment, okay, equal to Y. Y is equal to GDP, right? And you're like, wait, you're able to talk about these things. You're like, wait, so if we're at full employment, we're at full productivity. Yeah, full productivity. Y being productivity, you're at full potential GDP. And then we're talking about now overshooting. How do you overshoot GDP? How could you possibly do it? How is it done? What does it mean to where we are in our investment cycle inside the business cycle? And what the hell did Jay Powell mean when he said overshoot? Where does it tell us a couple of things? Where in the business cycle are we to even overshoot? What does that productivity gap? Because obviously GDP is less than Y, right? And then, so we're not at full employment. So what's that productivity gap? What does it mean to overshoot? What does it mean to where we are in the business cycle? And how does it interpret my investment philosophy over the next few years for investing in this economy versus a different economy? And then you'll say, well, that's really interesting because when you overshoot here, we also increased our production possibility curve beyond the curve through global trade. Plus, you can do it through fiscal and monetary policy. And you're like, but one is more sustainable than the other. And then how do you get out of your steady state? Okay? And these are very, very complicated economic questions that grad students work on. And this is what people in my swing trading group are learning and discussing so that they can say, well, where are we in the season? But where are we in the cycle? It's kind of like saying, Californians, for example, say, well, that's, next year's going to be La Nina, which is way different from El Nino a couple of years back. Right? What they're talking about is California, it rains, it doesn't rain, but it'll rain more some years and less other years. And there's seasons and there's cycles. And here, every year, trading exhibits reasonably similar patterns, and it has to do with humanity, human decisions, and business activity and transactions. Things like when are the holidays, when is tax season, right? That kind of stuff. Things that get in the way of investment. Okay? So, for example, when I say to you, the savings rate of Americans have gone up 25%, you'll say, oh my God, that means we can have an increase in investment next year above our depreciation rate, which would move the steady state. How many people thought that when I explained it? Look, JP Morgan just announced today their deposits have gone up 25% year over year. And you're like, oh my God, savings is equal to investment. Investment beyond beyond depreciation will increase our productivity and therefore increase consumption and move the steady state. If you're starting to make connections like this, now you're making investment decisions 5-10 years in advance. Because now you know where you are in the business cycle and you're able to future growth. And next year we're going to have, this year we're going to have GDP at 5 and 6%, but next year we won't, and you won't freak out because you already understand how the high calculations of GDP have occurred, what the normal level of GDP is, where we are relative to a steady state, what moves the steady state, things like levels of investment, levels of savings, levels of, in this case, free cash flow can lead to entrepreneurialism, which can also move these things. And you're putting all these things together and say, oh, well, I think the pound dollar is going to go up more than the pound yen. And not just today, but for the next 5 or 10 years, you think, I'll probably be buying some pound against this dollar. Big, right? And therefore, you can look at things and say, okay, the pound yen has been going up almost every day for 17 weeks in a row, but it's not going to continue. You can probably still make money on it, but there's going to be a new, better trade. You've rocked the world on those yen trades. Maybe it's time to thin the herd, put some cash in your pocket, and rotate some of it out of those ones into the next new thing. Okay? And isn't it amazing that it happened right on the new month? Okay? Was that too much? Was that too much? Did I get too excited? Is that all right? No thumbs up though, huh? No likes? I'm telling you, there are additional layers of skin to this onion we call Forex. And you can start layering and building up, and you can get bigger and spicy. Okay? So let me restate it again. I want you to master technical analysis. I want you to be the master of technical analysis. I want people to admire your ability to analyze a chart. And from that day, your career will begin, but you will be very elementary. You will be able to predict the past beautifully. But you have to be able to do that. If you can't read a chart, you will continue to suck for a very long time. If you can't read sheet music, you're not going to be able to play the piano very well. Now, you might know some songs because you memorized it. Okay? And then someone else says, well, what about this song? Oh, you like Beethoven? Yeah. You like Moonlight Sonata? Boom, 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 boom. Well, if you haven't memorized it, then no. Someone gives you the sheet music, and you're like, I can't play that. Why not? I actually don't know how to play the piano. I only know how to play for Elise. Okay? And then somebody gives you Bach, Toccata and Fugue. Toccata and Fugue? You nuts? I can't read sheet music. I can't play Bach. Okay? But so you have to start, and you have to learn the techniques and the basics of reading music and playing music. There's no doubt. But from then, we can get you a little better, studying sort of the mechanics of the notes. The reason you have keys and how keys harmonize, how so on and so forth. So to be able to say, oh, time to start rotating from yen pairs to dollar pairs. Is it necessary for you to be a success? Probably not. You could probably do okay technical only. But there's going to be another level if you're going to perform as a professional, especially an institutional investor. An institutional investor is required to deploy so much capital that you can't just scalp and spot trade every single day. Clear your trades at the end of the day, so every morning you show up and you have no trades in your account. You can't do that as a professional. Because you won't be able to, it's not like you're going to go in and put 100 standard lots on a trade, make 22 pips, get out, and start again tomorrow. It's not feasible. It's laughable. It's destructive to your experience because you'll never be able to grow big. And of course, I want you to grow big. So then the next layers are, can you predict the future? Okay? Can you predict the future? Well, Wayne, I'm going to have to do research and analysis and put some thought to it. Well, that is the value that you'll actually provide your client. So imagine now you're trading institutional money and you have to go to a board meeting and represent, represent well, the financial engineering that you're providing to the board, and you're like, well, this is what the first quarter of 2021 was like. We talked late last year about X, Y, and Z likely to happen in the first quarter, and that we'd be prepared for it. And sure enough, something very similar has happened. And these are the things that we did during the first quarter to mitigate that risk and make sure that we're on the plan. Okay? Moving forward here in the Q2, we're going to have a very different type of market. And these are the strategies that we have begun to carry out for Q2 and into Q3. So we expect this type of thing to happen, and therefore we're going to do these changes to the portfolio, again, to manage the downside risk, but also to try to get the performance that we're looking for, that the board is looking for. Okay, and so now you have to talk about what you think Q2 is going to be like, what strategies you're going to carry out, and what Q3 is likely to be like, even though that's way out there. But how are you going to behave today, next month, the month after, all the way into July, and what are you going to do, likely to do in July, August period, and you're like, wow, because you're going to meet quarterly to discuss the market conditions. So every time you meet with the board, because you're managing the board's money, and the board needs to make sure they have a more than reasonable chance of meeting their minimal acceptable performance to finance their activities, you have to produce 8 to 10% a year or whatever the objective is. So you are constantly sitting down explaining, this is what I said last quarter, this is what we actually did based on those strategies, and here's what the results were. And now let's talk about the next 3 to 6 months in advance and what you will do during that period. And of course, if you do something else, you could probably be open to litigation. So it's all about that is your value, to say, this is what I think is going to happen based on my analysis. This is what I'm going to do to mitigate the risks and find our opportunities and get the performance that you've asked me to do. And then you open up a chart. Every day, 24 hours a day, day after day after day, you have to do what you said you were going to do. You can't just wing it every day. Now, you have to be able to execute your trades. And when you execute trades, it's pure technical analysis. Okay? This coming down, the beginning of April, is not technical analysis. And I've shown you stuff like this, 100 million times? So somewhere in the back of your psyche, I hope you're saying, gosh darn it, he must be right. There must be a level of correctness in what he's telling me. And hopefully your appetite for this knowledge is increasing. You say, well, that would have been very helpful. And what does he mean? Yes, the yen looks okay here, but dude, his pound dollar looks better and is outperforming. Now, neither is really a good trade yet, but maybe in 3 weeks, there might be a difference. And you say, oh, well, that also would have been helpful. Okay? And then you can say, well, if that reduces some of my losses, but it also gets me into trades a little earlier so I can let them run longer, this 20% change in behavior that fundamentals and seasonality might have on your conviction and your ability to manage trades better, maybe you get 20% smarter, but your profitability doubles. Because think about it. Now, some of your trades, not all of them, may be worth more, but you'll also enter some less good trades. You might have some less losing trades, maybe not radically different. I'm not saying you're going to go from 50% winners to 85% winners because whatever I just taught you was so unbelievably brilliant. No. That's an overstatement. What I'm suggesting is if you get better knowing when these turns in the market occur, this is market behaviors now, right? This is behavioral finance stuff. Once you understand this, it polishes you a little bit. So in periods where you may do mediocre or lose money, you lose less money. There still might be mediocrity, but now you're expecting it to behave slightly different. So you have some of your losers are no longer losers. Maybe they're not winners, but you're taking a few less losses. That's reasonable. And then, because of your understanding of the behavior of the market and stuff, your good trades are, not all of them, but some of them are a little gooder. You're like, well, I'm up 100 pips, but I think I can get 300 based on seasonality, based on fundamentals, based on what the government's doing, based on what the central bank's doing, based on what's happening globally. You're like, this is good. Instead of getting out just because I have 100 pips, you're like, I think I'll let this run a little longer because I think this one is worth more. And so some of your trades become worth a little more, and some of your losing trades don't occur because you expected that mediocrity to show up. But think of the impact on your ultimate returns, your absolute returns, where you have a certain percentage less losses and a certain percentage of bigger winners. The change, right? Do you guys remember the formula from yesterday? The change is equal to new minus old over old times 100, right? And you get the change. And the change is probably more dramatic than you think. Okay? So a 20% change in your analysis, right? Let's say you're just 20% smarter, not 100% smarter. You're 20% smarter because you understand fundamentals and seasonality and such a little better. So you make 20% better decisions, right? And you, over the course of a year, I don't know, let's just say you skip 1,000 pips and losses. These are all 50 pip losers and all this stuff compounded over many. And then some of your trades you let run. So we'll just say plus 1,000, okay? Which means now you're up, right, 2,000 pips difference, right? That would be your new minus your old, okay? So you got your 2,000 pips more over how much pips you make per year. And let's say you make 10,000 pips per year. Well, I was hoping for more than that, so it's bad numbers. But anyways, you can do your calculation. And I think what you'll find is it'll have a profound difference on the long run. It won't put you in better trades every single day, but I'll tell you, even something like this, even if I'm wrong, okay, this gives me conviction. And how much is conviction for your analysis worth? Where you take a trade and you're like, that is a good trade. And you say, I'm not interested in 50 pips, I'm interested in 500 pips. Because I know that's a good trade. Okay? The conviction is worth more than probably anything. Right? Yeah. And so again, I'm not saying you can't buy pound yen. I'm only suggesting a portfolio construction analysis based on seasonality. Okay? Yeah, Raymond, what are you doing, buddy? Where you been, Raymond? He's falling behind, Bubba. All right, cool. Cool. Thank you for the likes, guys. I appreciate that. Okay. Let me ask you, are you getting portfolio construction analysis training from anybody else on YouTube? I honestly don't know because I don't attend other people's stuff. But let me know if that adds value. Maybe leave a comment today. Okay? Maybe leave a comment in today's recording. Okay? Okay. All right. All right. I don't know what I want to do now. What do I want to do now? Right on, Lucas. Yeah, you know, and Lucas, you've been around a while too, huh? So that's cool. Time for mimosas. I can tell you, I was very excited. My angel group, one of the vinters that we invest in, he's outrageously French. He talks with the I make a wine for the angels, and so there he is in the south of France, and I'm interested in this vintner because I love red wines from the Rhone. Anyways, so he's down in the part of France that grows Grenache and Syrah, and I like these big spicy wines, and he's made a point. So he grew up his whole life. His father and his grandfather, I think, were winemakers, and he's worked for all the big French companies, and now he's setting out on his own. But his sort of thing is saving old vines. So what happens is, as a vine ages 20, 30, 40, 50, 60, 70 years old, it's less productive. Okay? It's like a senior citizen working on a chain gang, right? swings the pickaxe a little less than a 20-year-old. So anyways, these vines have very, very good grape. They produce very, very good wine. And you can taste it because it's old. It's sort of, think of it as a woody, earthy taste. There's something in the older vine that you can taste on your palate. But the problem is they're not very productive. So if you get half as many grapes, now the wine has to double in price for you to make the same amount of money, but a lot of people don't want to buy wine that's that expensive. So what you do as a vintner is you just kill them. They're producing fabulous wine. Yeah, you just rip them out, put in new vines that are going to be more productive, and you get more grapes, and then you can sell wine for cheaper. I'm like, who the hell buys cheap wine? Like, oh my God, sacrilege, right? So anyways, this guy he's buying up all the old vines and paying twice as much. And I'm like, I like this guy. So anyways, a whole bunch of his wine showed up at my house last night. And like, I got it all prepared. I had one normal glass of wine, right? Gobbled that down, glug, 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 and I'm so happy. Now I have my comparison. My palate is awake, right? I have some, and then I get my little snack, and I get my snack. I have some nuts and some cheese and some meat, and I pour my wine and I let it decant a little bit or let it breathe a little bit. And then I fall asleep. So there's my big night. So I opened the bottle. I got the glass. I didn't have any. Anyways, so I'm going to taste one bottle. So I got a Syrah and a Grenache. And then they're going to go in the cellar for probably 10 years. So anyways, I don't know about the mimosas, but I definitely have a Grenache sitting in my kitchen that's basically decanted overnight. So yeah, maybe I'll be drinking some wine and I'll show up to get my vaccination drunk. Wouldn't that be nice? Super classy. But what a cool idea though, huh? That the guy is saving the 70-year-old vines. I think that's super cool. So I give him money and he buys vines, that are, I mean, can you imagine 75-year-old vines? Pretty amazing. Okay, Bitcoin stalling out here. I'm just watching this because of a cash position, but no big deal. Brent is on its way. That's on its way. How's the dollar doing relative to everybody? Yeah, it is, right? Remember this conversation? Amazing, right? This was after the CPI news. Did that help you stay calm? Do you guys remember? And the dollar skyrocketed. Do you remember that? What was it, yesterday? I can't even remember. Wasn't it yesterday? Yeah, today's Wednesday, so yeah, yesterday. It comes out. And it's like, oh my God. And the dollar's strong. And I'm like, stay with it. I'm not going to be worried unless we're above, right? And so I said, the real question is, will it roll over? And sure enough, it did. Okay. And that one little piece of analysis, right? So you could look at it. I made over 500 pips based on, since yesterday, 500 pips because we had conviction based on our analysis, not our stubbornness. You see? And I want that to be the lesson that you learned. Conviction for the analysis you've already done over days and weeks, even months. And with that, you say, wow, look at that CPI. That's amazing. But there's the volatility around the noise around the news is not going to take me out of a good trade because I have conviction for my analysis. And I have disregard for the noise. And if you have that ability, it can produce, even in one day, 500 or 600 pips. 500 or 600 pips is a pretty good day trade, huh? So I hope you walk away with that lesson learned. Okay, no more guessing, no more theories, right? What does the research show? Are you looking for the right information? The savings rate in the United States has gone from 0 to something positive. The rate of change at a major bank is up 25%. Savings is converted into investment. Investment above the depreciation rate moves the steady state. And the steady state is where moving the steady state is where you get your increase, right? That's where you make your money, putting money into an economy that has an increasing steady state, but you have to ask yourself why and where does it come from, which leads to more productivity, but then can also lead to cycles, right? To cycles. And knowing where you are in the cycle will give you conviction. Is this a 10-year trade or a 10-month trade? Pachow. Pachow. Now you got it. Like a boss. So thanks for being on my team. Thanks for being a member of FX Bootcamp. Thanks for being a client of tradersway.com. All the links are in the description below the video. Please leave a comment and thumbs up. Okay, leave a comment on the recording. But also, if you want to join my live group and all that kind of stuff, that's fxbootcamp.com. The link is in the description below. The link to my book on Amazon is in the description below. Link to Trader's Way is in the description below. A link to my chart templates is in the description below. If you need help, you need resources, you need support, all those links are in the description below. So, without further ado, have a wonderful day. I will see you tomorrow. Peace on earth. May the pips be with you. May our profits be above average. And day 2 on the vax, huh? Second vax today. So hopefully I'll be here tomorrow, right? Never know. So, cheers.